Fed Chief Janet Yellen is not ruling out these negative interest rates, as we said. What that means is you give them money and you get back not quite all your money, which is warped, which is weird, which is a precursor to bad stuff, I mean, my view. But again, I read a prompter for a living, don't I? Market watcher Gary Kalpam does not. Charles Payne, the host of Making Money on Fox Business, he does, but he also invests. So he's really a conundrum. All right, so Charles Payne, let me ask you a little bit about this negative interest rate situation. That's generally not a good thing when countries say they're open to it, because the history suggests that can lead to bad stuff. What do you think?
Well, you're absolutely right. History also suggests it's bad stuff that leads central banks to do this. It's sort of a last-ditched effort to sort of turn things around. Jerry Willis mentioned 4 countries. You take more recently Japan, which is now in their 20th decade, 2 decades now, 20 years of just going nowhere. So, some parts of Europe. It's really interesting because Senator Pat Toomey was the one who asked, said, listen, wouldn't this hurt small savers? And Janet Yellen said no. And she said, listen, we're examining this and we do not want to take it off the table. I mean, it's really nuts that they would be looking at this and maybe somehow de facto admitting that they have no clue what they're doing. You know, that always rattles folks, Gary, when you hear that, because a lot of people look to the Fed to be the grown-ups in the room, and despite what you might think of Ben Bernanke, what he did post the meltdown, he was the only guy getting stuff done. You might not like what he was doing, but he was getting stuff done. But now if the Federal Reserve, presumably adults in the room, looks like it's scrambling and doesn't know what it's doing, that can't be good.
I heard from Janet Yellen today, she will let us know what's up when she finds out what's up. And by the time she finds out what's up, it's already down. And therein lies the issue. You know, Neil, for a couple of years, I have been warning about the day that the markets start ignoring central banks. And that's what's happened over the last few months. You had Japan go negative rates and announce more printing of money. So did Europe. And both times the markets crumbled instead of rallying up. For years, the markets loved it. Now they hate it, and the markets recognize that they have no control anymore. They don't care what they say or what they do, and that is bad news because these central banks do not shut up. They're out in full force almost every other day, saying something or doing something, and I'm afraid it's going to cause more cataclysmic moves in the market if they continue that way.
Right, they do not shut up. It's like TV anchors. You cannot. Hello. You know, Charles Payne, I'm listening to this and I'm wondering, all right, I know panic ensues when people keep seeing panic. I know they get annoyed when they keep hearing us say, all right, it was down over 400 points and we're supposed to count our blessings because it's only 254 points. I can't imagine for people who are thinking about getting in the markets that this is an encouraging series of events.
Well, it's not certainly for the average person out there, although the oldest axiom on Wall Street, the one that everybody knows, is buy low, sell high. We know that when it's coming down hard, very few people are buying and they're all selling. And in hindsight, it always turns out to be a major mistake. But you're right. This is a vote of no confidence. Gary hit it right on the head. It's a major vote of no confidence because the people with all of the tools don't know what's going on. Janet Yellen admitted that she didn't think the dollar would get this strong. Janet Yellen admitted they were shocked that oil went this low. When you have Janet Yellen admitting that these things they had no clue and to a certain degree don't want to admit that their policies or their decisions played a role in it, then that's alarming for everybody, including the pros, no matter who you are, novice, no matter what.
All right, well, you're a pro, Gary. You're looking at this. You telegraphed a lot of this. You know, you always wait for that moment. What do you guys call a capitulation, when people throw up their arms and had it? That's usually a turning point sign. Are we near that or no?
Neil, unfortunately, I think we're still in the early innings of this bear market. And I hate saying this, but it kind of feels and kind of has the makings of what we saw when we had some big bear markets. And I have to tell you, I am watching the financials very closely here. They are acting like there's really something up. And it's not just European financials anymore, it's here. I'm looking at what Bank of America is doing right now, Wells Fargo, Morgan Stanley, and the rest. They act like there's something going on in there. I don't know what it is, and I hope we don't find out. I am keeping fingers crossed. There's
Wait a minute,
nothing
when you
bad,
say they act like something clearly is going on. When we hear out of the European institutions, they're coming out and saying they're fine. That I kind of remember from 2007 and 8. They kept trying to reassure people, but the more they reassured them, investors started wondering, why do you keep reassuring us? Charles Payne, I mean, if you hear that kind of stuff, or this bubbling noise with that sector among the hardest hit, I'm talking the financial sector, we're supposedly more cushioned for any serious blows, that is here in the United States, for bad stuff than they are in Europe. Are we?
Like Gary said, I think we are, but you just never know. I still think there's too many opaque walls around these banks. Let's face it, the Federal Reserve bought trillions of dollars worth of junk from these guys. They rolled out the red carpet. We bailed them out. You know, and it's still a big question mark. It's so unfair to the American public because they got bailed out. They don't make loans the way they used to. We don't have a business cycle the way we used to. Everything has been so messed up, so skewed, all in an effort, by the way, to prop up a handful of banks, and it always seems to backfire. And guess who pays the heaviest price for it?
And by the way,
watching
if any one of them guys were to go belly up again, we would most certainly be bailing them out again.
That's a shame.
You know, it is what it is.
Yeah.